Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on oil and oil on the weekly time frame after the breakout. It's been a big 3-week breakout here, but this upper wick does look like we are in for some consolidation, showing some profit taking occurring. We have broken the lower high pattern by breaking two levels, 50.40, and then we broke 51.97. The current top is 52.83, and the next level after that is 53.74. So making our way up through these resistance levels. There aren't many of them before we head to the high of 2017, and really the high of the last, let's see, it's almost 52 weeks at this point. But the daily time frame is seeing healthy consolidation. We had that big climax day with the upper wick and then started the more significant pullback, and it's just stair-stepping higher. So right now, anything above 50.05 is a higher low on the daily, and the bulls are trying to hold 51.20 and 51.23. We have a little inside bar on the daily time frame to be watching this Sunday night and into Monday. And we have the RSI here up at 70, and that's what is leading. I won't say that's the reason that we're pulling back, but that is entering that little overbought zone and then consolidating. And you can see the last time that the hourly, or I should say the daily RSI hit 70 was back in June of 2016. So it's been a long time. We pulled back just under that level time and time again, and in this instance, we pulled back just over it. So we're looking for a healthy consolidation. The 4-hour time frame, we broke the higher lows here, so we would now anticipate some lower highs and lower lows. It does look like we're just beginning to shift this momentum, and that big bearish candlestick with the highest volume that we've seen in recent trading is a reason that we broke that higher low pattern. So bears in control of the short term, and on the hourly time frame, we can see that recovery from the dump, not really doing much right now. The high of that bounce is 51.74 resistance, a little double top. So that will be a level to be watching on Monday as well. USO on the daily time frame, healthy, clearly higher low pattern. We've got, let's see, where is this level? We're looking at 10.04 as support and 10.35. So that 10.35 level is lining up with the oil daily chart where we formed a higher low at 51.20. And we're watching to see if that level can hold. If not, there's a gap at 10.26, and then a couple support levels on the way down, with 10.04 being the key support on the daily, I would say. If that were to break, then that would ruin the uptrend on the daily, but as long as it holds, the bulls are very strong. So there's that bearish reversal shooting star candlestick with a big upper wick and small body, rejecting from the 100 and the 50-day moving average resistances, and just looking for some consolidation after a significant bull run. There is a resistance level here of 10.70 that we did not break, but we broke that correlated level on US oil. So that's worth noting that USO is slightly weaker, where we've only broken one of the lower highs, haven't broken two as US oil has. So worth keeping that in mind. On the weekly time frame, you can see the longer term pattern. Anything above 934 keeps the bulls in full control of this longer term pattern. And for USO, or I should say for US oil, on that same weekly pattern, anything above 45.62 keeps the bulls in control. So more than 10% wiggle room before this weekly chart would start to look bearish again. So that's a good sign for the bulls that they have that much wiggle room in terms of keeping the longer-term weekly trend in their favor once this downtrend resistance broke. And just looking for some healthy daily consolidation. What I'm going to be watching for to start this week and heading into the inventory report is, can the bulls keep the daily higher low pattern? And that key level is 50.05. Might as well call that 50 psychological. Thanks for watching. Hope you have a good rest of your Sunday, and we'll see you throughout the week.